What's very interesting is, I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university.
Raoul Pal's Everything Code thesis argues that the only way to manage global debt is through currency debasement. Unlike traditional finance, which focuses on inflation, crypto investors understand debasement as the steady loss of purchasing power across all assets. Pal says the real game is debt refinancing, and those who ignore this structural force risk falling behind. For investors, only two asset classes consistently beat debasement: technology stocks and cryptocurrencies. Within crypto, the safer trade is owning strong layer ones like Bitcoin, Ethereum, Solana, or Sway, while retail money often chases cheap tokens like XRP or Doge. Liquidity flows the same way it does in traditional markets, starting with safer assets before moving into higher risk plays. Pal also highlights NFTs as apex tokens, comparing them to fine art in traditional wealth cycles. Collections like CryptoPunks have proven resilient, often outperforming even major cryptocurrencies in ETH terms. With crypto wealth set to grow massively in the coming years, he believes scarce digital assets and leading blockchains will capture the largest gains of this cycle.
I've said this for a long time. I mean, as you know, my main bet has been Sui for a while, and before that was Solana. Those rotations have done well. Sui still generally outperforming Solana over a longer term basis. I think the next phase of Bitcoin dominance, we're seeing the ETH rotation trade. That's good. The catch up is happening. Okay, once it gets into kind of mid value versus Bitcoin again, then I think we'll see the rest of the space utterly ignite. And as we know, once you throw in a lot of liquidity into lower free float things, they go up more. And that's how it always plays out. And that's where we are in the cycle. Now, one of the things on the macro side that we look at is the influence of the business cycle on that particular trade. And it's the same trade you and I have grown up with in markets is earnings have to go up for people to go further out the risk curve. So when the ISM picks up properly, the business cycle picks up, corporates and people earn more. And what we find is, in the bond market, it goes out to junk, then out to emerging market junk, and then out to private credit. We see small caps outperforming big caps in equity markets. We see all of this, and it's the same with the altcoins. The issue is everybody thinks their altcoin should go up. That's the issue. Is it's like everyone's like, well, mine hasn't gone up, so therefore this is all wrong. It's like you need to have the right altcoins, and I think people mid-curve it. They get so involved in the value benefits of their particular token when really there's one simple thing is go onto CoinGecko or CoinMarketCap and look at crypto. And we've talked about this. It's like, I'm sorry, but people are going to buy XRP and Doge and Cardano, whether you like it or not, because they're cheap in the absolute term of how much you pay for a token. So people will do that. The alt layer ones that are getting absolute network adoption, Solana, Sui, few others, great. And then somewhere in the middle, we'll see what happens. But I think the middle part is the harder play. Hey, I've got this DeFi token that could be amazing. That's pretty hard. There's some idiot-proof ones, which is big layer ones that get adoption go up a lot and they're less risky. And the moron trade, which is always a good one, which is just buy the cheapest thing on the top 10.
The moron trade. I like that.
Look at this. In fact, I'm going to show you the moron trade now. And I'm not saying that these are moronic and people are moronic for owning them. I'm talking about when retail come in, what do they look at? Hold on, what do I get? Okay, I'm just going to share this. Okay, so you're new to crypto. Welcome to crypto. Oh my God, Bitcoin, I can't buy that. It's $116,000. I can barely afford lunch. Ethereum, well, that's pretty expensive. Oh, but XRP, I've heard about that. I saw some videos on YouTube. It's $3. BNB, well, I don't really know what that one is. Solana, $175. Oh, but Doge, Elon likes Doge. It's 22 cents. And Cardano, I've seen tons of videos. It's 78 cents. You can see what happens because we've all done it too. So that's my general thesis, that the anchoring bias of price is a real thing, and look at the top 10 because you think you've de-risked it. What's very interesting is, I've had this everything code thesis for quite a while now, but generally speaking, the crypto space has understood debasement of currency versus inflation, which is what TradFi thought of. And we've been on this trade saying they need to refinance the debt. That's the whole everything code thesis. And here is Scott Bessent coming out saying publicly, we need stablecoins to refi the debt. Trump saying we need the Fed to cut rates because we need to refi the debt. The whole game is now open. They're telling you what the game is. And there's still a lot of TradFi people who don't want to understand it because debasement's not a thing that was taught at university.
Is there anything else you find is an investable asset class right now? Like, I know AI and robotics and these sort of things also have like not dissimilar return profiles, but is crypto just the only thing that you're looking at?
Well, so very simply, what beats the debasement? Debasement's about 8% plus a bit of inflation, whatever. So call it 10, 11%, 12%. Well, the S&P does that. So that doesn't help. Gold does a little bit less, so that doesn't help. So you've only got actually two assets in the world that outperform the debasement of currency. One is technology stocks and one is crypto. When you divide the NASDAQ by Bitcoin, it's down 99.997%. So it's like, okay. Then when you put the correlations of the long-term drivers of the asset prices, 97.5% of the NASDAQ is explained by debasement, liquidity, and 90% of crypto. So you've got the largest dominant factor in the history of macro markets over the longest persistent period of time since 2008. So you basically only need to care about one thing, that. And the other side is how fast is it being adopted, which is why it outperforms the debasement. So in which case you've got only one macro factor that matters, which is why I keep saying to everybody it's all noise. Whatever it is, fucking Israel, China, nobody cares. Nobody cares because it's 90% of all price movement is explained by one factor. And then so just
you must
if
get
that's
really
the case,
bored
just buy
going
one
on
asset.
You must be really bored going on these podcasts, Raoul. It's the same. It's like, right, okay, yeah, ignore everything. It's oh yeah, this news has come out this week. No, not important. And I
this
think
is weird to me, right? I was never that guy. I was like, the diversify, we need a bit of this,
of course.
and some emerging market call options, and it's like none of it matters. If it's crypto, then all you need to do is look at what is the strongest performing chart, let's say on a weekly basis, and that happens to be SUI. So I just own that. But you could just own Bitcoin, or you could probably just own ETH, or you could own Solana, and you'll be fine.
Raoul Pal says the real driver of markets is currency debasement, not just inflation. As debt piles up, purchasing power erodes, and the only way to stay ahead is by owning assets that consistently beat this trend. For him, tech stocks, major cryptos like Bitcoin, Ethereum, Solana, and even NFTs such as CryptoPunks are the winners. He believes these scarce digital assets will capture the most value as crypto wealth surges in the years ahead.
The M2 chart, this was out, I think Julian put this out a couple of days ago, and it's lagging a bit, but it has these leads and lags. We shouldn't expect it to completely follow squiggle for squiggle, because in which case it's just doing debasement and not network adoption. But it's this kind of period here where we should be turning up and seeing the acceleration point. Did we play catch up? Most likely. So it feels that, yes, there's been a slight lag. Is there any major structural issue there? No. Also, this is Bitcoin. And as we know, dominance is going down. So dominance changes this somewhat because what we're going to see is the other assets doing it. Now, if I can show you, let me stop sharing this one, just show you the Bitcoin dominance chart as well, just for completeness. There's the Bitcoin dominance chart. It looks to us like it's forming a head and shoulders top pattern, which would break lower. That would be very typical of this stage in a bull market. And in which case, things like global M2, Bitcoin won't track as well, but the overall space will track it really well. And you'll see the acceleration of assets. So we've had ETH as the main beneficiary, which makes total sense. A, everybody was massively underweight. And B, suddenly the entire world is building on top of ETH rails, which is what I said would happen. Is like the financial industry is, they'll choose Microsoft over Apple every time because that's what they do. You don't get fired for building on ETH. So Robinhood, could they have chosen Solana to build on? Yeah, but they chose an ETH layer too. Kind of because that's what, as you and I know, go into any single investment bank or hedge fund on earth, It's all Microsoft.
I know you were mainly in like the Solana and Sui. I know your ETH trade's mainly been via NFTs, which has become a very interesting trade now too, it feels like.
Yeah. So look, I've never had an issue with ETH. And
Raoul Pal argues that debt and currency debasement drive markets, and the best way to protect wealth is by holding assets that outperform, mainly tech stocks, major cryptos, and scarce NFTs. These assets benefit most from liquidity flows and adoption. He believes Bitcoin, Ethereum, strong layer 1s, and NFTs like CryptoPunks will capture the biggest gains as crypto wealth expands in the years ahead. Ignoring these signals, he warns, could be a costly mistake. Will NFTs like CryptoPunks really become the fine art of Web3? Which crypto do you see leading the next bull run? Let us know in the comments.